Okay. It's your boy Brandon Chung, man, and I'm back at it again, man. I'm back at it yet again. I'm doing something very, very different today. We got a guest this time, and he goes by Comeback Card Investor. So just introduce yourself, my man.
What's up, guys? My name is Brad, and yes, as Brandon mentioned, I go by the Comeback Card Investor here on YouTube. I'm getting back into
Yeah.
cards just a couple months ago, and I'm having a blast, but also bringing my personal finance background and investing experience, as well as just being 33 years old and everything
Yeah.
that's gone on in the last 33 years of life to hopefully help me on this journey.
Yes, sir, and help me as well. I'm 22-year-old guy. I'm kind of young, so it's first of all, thank you for doing this with me, man. I really appreciate that.
Dude, Brandon, I'm happy to be here with you and to do this because you're one of the most positive and
God, cool.
likable guys out there on YouTube and on TikTok in the card field, and you're only putting out positivity, and that's going to come back to you tenfold. So I'm happy to join you and at least connect with you face to
Yeah.
face rather than just a little text on YouTube here or there.
Exactly. And likewise, I see your YouTube content is unlike anything I've seen. I really gravitate towards that. So thank you so much for
Appreciate
what
it,
you
man.
make as well. Yes,
Thanks,
sir.
man. So
Yes, sir.
let's get in, man. I'm excited to chat a bit. What do you got on the docket for us
Yes,
today?
sir. I'm just okay, so here's how we're gonna do this. I'm just gonna throw out different topics and we're just going through
All
different
right,
topic, okay?
let's do
So
it.
So I want to talk first of all personal finance, right? Just sports cards and just tell me what you see in the sports card industry from personal finance aspect.
I mean, from the personal finance aspect, I see the themes that I see are pretty much what's going on in the economy as a whole, which is usually just, all right, we've been in this quarantine, so everyone that has work doesn't have much to spend it on. All the vacations have stopped, all the restaurants have closed down, and of course now it's starting to reopen, but people want an escape. They want something fun. So they're looking at sports cards as this nice, new, fun hobby that is replacing gambling and replacing actual sports. And then there's also people that have lost jobs. There's 30 million plus Americans that have lost work. Yes, other companies are hiring more, but there's a huge transition and people need extra money. People from college kids all the way up to 80-year-olds that may have been laid off. It's like, hey, if I can make extra money, whatever it is, I'm open ears. And then when it's something as fun as this, of course, people are going to gravitate to it. So it's very hard to piece together all the moving parts because it's not just the economy from 6 months ago entering sports cards. Now we're having sports cards blow up with all these other crazy, like once in a lifetime events, and that's the hard part is like what direction is it going to go. We have the stimulus checks and we have loans
Exactly.
bailing out businesses, but that
Yeah.
doesn't really help businesses long term when customers don't come back, and stimulus checks only last until they last. And then if you don't get work, or if
Right.
your employer doesn't hire you back, or if you can't make that payment, what's going to happen? So there's a lot going on that I'm trying to figure out because, like we talked about before, I'm a bit nervous to go all in on sports cards when I know that a lot of people that are getting in are using their credit cards, and that limit
Yes.
may be running out. And that credit card company, that bank might say, all right, no more. It's time to pay up. What's going to happen if half the people getting in are doing this and can't get, you have to have those cards repossessed, or can't go on
Wow.
buying like that. And like that's something I
Wow.
just don't know. I don't have the data, so just kind of
Okay.
it always plays on my
Okay.
mind, because the macro economy is what we're all in at the end of the day, and the micro economy is the
Uh-huh.
sports card world. But there's so much
Exactly.
craziness in the world that it's hard to really understand the sports cards right now.
Wow. Great answer. You're already making me excited and making me nervous at the same time. I don't know how you
That's
do
what I
it,
do.
Brad.
Yeah,
I
that's
don't
what I
know how
do
you do
with
it.
the
So
ladies too. I make them excited and nervous too.
excited and nervous. So okay, so a couple things I caught is like stimulus check, credit card, all the things I kind of shiver, honestly. So I just got a question, right? You're speaking college students, right? In my perspective, you know how most people have college loan debt, student loan debt. If they've been in college, you know, it could run anywhere from 5 digits, maybe 6 digits. Or I hope
Yeah.
not,
Oh yeah.
but
Some people for sure. Yeah.
yeah. So tell me, right? I've heard Gary Vee say this before, and I don't want to mention his name too much, right? But um, where's my thought process? Sorry, but he's been telling, you know, he has said in his video, oh, if you're a college student, you have loan debt, you know, why don't you try to join sports cards and flip and make $100 or $200? So I'm thinking, how are they going to get that money in? And secondly, why not pay your debt off first? So I don't know. Can you just give me your opinion on what Gary Vee said?
I mean, I know he's big into sports cards. He's big into not buying dumb shit, as he would say,
Yeah,
and he's not big in college. And uh, like, here's the thing: there's a lot of people buying sports cards now that have not built the foundation of being out of debt first. And while you
yeah,
could buy sports cards to get out of debt, I think the majority of people that are in debt, especially if it's not college tuition, but especially if it's credit cards, you get there because you're irresponsible with money. So,
exactly.
like, you know what I mean? If you
Yeah,
look at college tuition, yeah, it's ridiculous. It is somewhat of a scam for a lot of careers because it's just I remember if you're in high school now and you're considering going to college, there is a podcast put out by Dave Ramsey, who is the #1 financial guru coach here in the
oh,
US.
I know.
And Gary Vee's even featured in it. And it's an 8-part series, but they go
Wow.
over all the statistics and everything about college and how the tuition has gone up, I think, 8 times what the salary of a college graduate has gone up. And it's just
Exactly.
insane. So please listen to that first. But, you know, if you're in college, like, look, I was in college, I got a degree. It didn't
Exactly.
do
Yeah.
a damn thing for me. It was a marketing degree from a state school. It just didn't do anything.
Wow.
But fortunately, I didn't have debt. I had a
Oh,
scholarship. I worked my
congratulations.
way. Yeah, thanks. And I mean, it's kind of
Yeah.
lucky. My parents
Yeah.
helped out as
Honest.
well. So it was very fortunate. But I think the beauty of the sports cards is that you don't have to put in hundreds and hundreds of dollars. You don't have to put in thousands of dollars. To
True.
me, it's a lot more of the learning aspect of how can I buy a $5 card? What can I do with $5? What's one card I can buy for $5 or five $1 cards and make a
Right.
profit? And that can scale up for the rest of your life because the same process of this $5 card, flipping it for 10 and then $10 card, flipping it for 18 and then 18 goes to 40 and then all this up. It's the same thing as how people become wealthy with real estate. They buy a single
Mm.
house, they renovate it, and then they rent it out and they take the equity out, they move it onto
Mm-hmm.
another house. And then that other house is bigger, and then they move that onto a duplex. And then the duplex turns into a quadplex or a fourplex, and then that goes into a 6 and an 8. And then 20 years later, you have a 50-unit apartment building
Mm-hmm.
of your own. But the
Mm-hmm.
whole point is that you don't have to start with that 50-unit apartment building. You start small and you build up, and every time you just get a bit smarter with your strategy. You understand what works and what doesn't, and then you get a bit
Right.
tighter and you scale that up. And I mean, that's the same thing I'm doing with cards, and that's the same thing I'll be doing with real estate in the
Wow.
future too, because it's all
Wow.
about the mindset and getting a winning formula, and then just tightening that as you go to the point where you know that it doesn't matter. You are going to be good in the long run because you figured out what works, and now it's just a matter of scaling up.
Wow. Yeah, you make a very excellent point, right? Of sports cards, right? Yeah, like you said, $5, and then it just builds up a level, like the $20, $50, $100, etc., etc. When you were talking about that real estate, I was getting excited. 16 part complex, and that's very true for sports cards as well. But here's my problem with it, right? People are only seeing that vision. They're only seeing, okay, he Zion sold his card for $100,000, or LeBron's most recent card is going on bid for $900,000 or something like that. His exquisite or yeah, one of those. Yeah, yes. Yeah. Um, So let's talk about risk versus reward now, right? So just because I know the reward people see, and it's huge. You can make literally 10x your money. I have with a couple of my cards. I don't really want to bragging too much, but just give me your insight on like risk versus reward in the sports card industry.
Well, I think right now, like you said, everyone is looking at the reward, and it's
Yeah.
very easy to look at a reward when the industry is growing, right? Everyone's looking at the
Right.
reward in real estate over the last 10 years, from
Mm,
2009 to 2009, well, 2020 up until a couple months ago. It was all reward because, hey, look at what this was worth 6 months ago and a year ago and 2 years and 3 years and 4 years. And the
right.
problem with that is if you only focus on the reward, you forget that there's risk involved and that there are ebbs and flows. There are peaks and valleys, there's plateaus. And, like if you don't understand macroeconomics, if you don't understand
Right.
how this all
Yeah.
pieces together, it's easy to just focus on reward. But that's also
Yeah.
why I have to look at, hold on a second, there's 30 million people unemployed. The average
Exactly.
American has over $8,000 of credit card debt themselves, not including their spouse. And then on top of that, the average graduate now has around 25 or 30,000 of tuition debt. And, and
Jeez.
so I have to think of, I can't just be in this little bubble of sports cards because there is this world outside of sports cards that affects sports cards. So
Right.
in terms of risk and reward, the question I always ask myself with a card is, how much can it go down?
Exactly.
Right? I know it
Yes.
could go up. I know a $2 card can go up to 10 or 12 or 15.
Yes.
I mean, who knows? But
Right.
what can
Right.
it go down to? That $900,000
Mm.
LeBron card, yes, it can go up to this. And that person that buys it, he could be thinking it can go up to 2 million,
Yeah,
or it can go
that's
down to
true.
400,000.
Yeah.
You know what I mean?
Yeah.
So,
That's yes.
so, so
Yes.
it's one of those things where if a year ago that price was so much lower, I'd be nervous because, yeah, people are getting in and maybe long term it'll go up. But if a year ago it was so much lower, then I believe that it could go down to that point again. It
You're
could,
right.
because if
Yeah.
the whole economy crashes, hey, that's a great card. I'd love to have it, but I need to pay off my mortgage. I need to do other things. I can't just
Yes.
afford a $900,000 card now. That's when I had a
Yes.
job and where I had this huge business that was running, and now I had to close my doors, and now I can't just go out and buy amazing cards. So to me, with all the instability and the volatility of the whole economy and the world and the country and elections and everything right now,
Wow.
I'm
Yeah.
way more on the conservative side. But when the dust
Yeah.
settles, when everything is normal or somewhat normal, when the elections have gone through and coronavirus has simmered and we at least have some stability, then I'll feel good about saying, all right, these are the normal ebbs and flows rather than right now, everything is just crazy.
Wow. Yeah. Yeah. You're making some fantastic points right here. That's why. That's why I brought you on.
Well,
You're
appreciate
just
it,
making
man.
good point after good point, and then this is honestly kind of the common sense we need in this industry, right?
I mean,
Because go
I
on.
think it's just being a bit skeptical, but in a good
Yeah.
way. I think it's skeptical to protect yourself because everyone, whether
Exactly.
it's, I mean, look, same thing. People were saying the same thing about Bitcoin. It's only going to go up.
Yeah.
It's only going to go up, and maybe long term it will. But there's certain people that bought Bitcoin at the wrong time, and then it went down. And
Exactly.
so it's the same type of mentality going over to this industry. It's the same thing as I'm going to start a CBD place. I'm going
Yeah.
to invest in marijuana. I'm going to invest in whatever. Yeah,
Yeah.
there's a gold rush to it, and it's very easy to be drawn in when
Right.
everyone's making money. But that is
Right.
not a lasting formula. That's not how it works long term. There's going to be that part where it's like, all right, now investors stop. Now it's not new anymore. Now markets shift, and I just feel bad when people don't get that message because
Right.
they just have their eyes fixated on this new shiny ball that's going to save all their problems in life or solve them all.
Exactly. Right. That shiny ball. People want just that. That's something that like that's in literally in their dreams. That millionaire. That whole millionaire idea. And people don't think about the protection first, right? And
Well,
oh,
I
okay.
think
Let's. What's going on?
Well, real quick, Brandon, there's a
Yeah.
quote by Warren Buffett. I don't know if I mentioned it to you or
Please,
if it
please.
was just online, but it was, and I don't know the exact quote. I'd have to look it up, but it was something like the best investments usually draw a yawn
Yeah.
versus an applause. Like a lot of people are looking for investments to get the applause because it's a flashy investment, but a lot of times the best ones draw a yawn. Like, oh, boring. But boring
Yes.
usually means proven. Kind of like how a lot of millionaires, they don't drive flashy cars. They have businesses like ATM machines or laundromats or these things that are like, oh, it's a cash cow of a business. But no
Right.
one is proud to say, oh, I own 3 laundromats. That's boring. But
Yes. Yes.
but at the end of the day, you look at the bank account and you go, holy crap, that generates 10 grand a month per laundromat, easy cash flow. Well, that's better than having this sexy new restaurant on the corner that
Oh, there we
is
go.
losing money every month.
There we go. So the way I can use an analogy to compare that to sports card. It's like your laundromats, your boring businesses. It's like sort of your sports card bond investing, more like not Michael Jordan, but maybe even Charles Barkley or Magic Johnson or Kareem, right? But these are super safe sports cards, and that sexy restaurant is like that Zion, but you never know what's gonna happen. So
Yeah.
I'm glad you brought that up.
Yeah. I mean, who are the coolest cards? If you were going to showcase your collection to
Mhm.
someone, what are the coolest cards right now? And I'd have to say something like
Exactly.
Luca and Zion because
Yes.
they're so hot right now. They're
And
hot
Trey
in the
Young.
media, in the ESPN. They're up and coming. They're trending. And then a Charles Barkley rookie card where it's like, all right, yeah, it's Charles Barkley, but it's not as exciting. He's already retired. He's an analyst. Yeah, we like him. But that would be more of the conservative, proven uh,
Right.
laundromat type of investment versus the Zions and Lucas, where it's sexy, but just like that restaurant on the corner, it's the new hot restaurant for 6 months or a year, and then it goes out of business, and then a new hot restaurant opens up on the other corner.
Exactly. Okay, now I'm gonna use that time frame again. I'm gonna use your example again. I'm sorry I keep doing that, but watch this, right? So 6 months to a year, this restaurant's gonna be hot. I don't know how you translate that to sports cards, but let's just use that same timetable and say this sexy card is going to be super high demand for 6 to 12 months. Well, isn't there money opportunity there, right? If you're talking about Zion Prism PSA 10 or Luca Prism Trey Young, like flipping opportunity.
Sure,
Yeah.
of course there is. I mean, but I think everyone goes in with that, and then if Charles
Mm.
Barkley tears an ACL right now, then he's still an anchor for TNT or I think yeah,
Who
TNT.
cares?
Right.
Who
Luca
cares?
and Zion get injured,
Yeah.
get accused of assaulting a taxi driver or some.
Done.
I'm just saying, like,
Yeah.
yes, it can go up, yes, and it might just go up just from them doing their thing and people entering the market. So it definitely could, but again, it can go up. It definitely can go down. So
Right.
I don't think it's bad to say, all right, I'm going to invest in Zion or Luca, but the point is that when so many people have that same philosophy, then they're hyping up that price
Mm.
so much that now it's like, do you really want to buy that versus someone that is a Hall of Famer and is timeless and has all this? Because that's the point where I'm like, wow, these prices are really high of someone. Like, how many
Yeah.
games has Zion played? Like 19 or something? Wasn't it
Yeah.
like he played
Like 25 or 19.
or
Yeah.
okay,
Whatever.
right? So that's great, and he can keep going up, but at the same time, there's a handful of reasons why it might not. I mean,
Yeah.
he could get injured.
Very true.
Something could happen. There's like the more you pay
True.
in, the more you need everything to go right. Because one thing going
Yes.
wrong, a $500 card now goes down to 100. You know what I mean? Because
Yeah.
I mean, what if he tears his ACL and they're like, no, this is horrible. He's going to be out for a year. That $500 card, okay, not only is he out for a year, maybe he's not the same after the injury. So it's one of those things where, yes, it can keep going up. And you can buy now, and even without NBA going on, that might actually be a good thing because the hype continues. But what
Yeah.
if they get bounced in the first
True.
round and all of a sudden it's like, well, that was a bit disappointing, and now the card goes down
Mm.
from that. So in a way, I've been having this conversation where every player has a lot of hype right now because no one has lost in the last 3 months. No one has sucked. No one has thrown an air ball. No one has thrown an interception. No one has been sacked. No one, like, there's been
Exactly.
nothing negative really for the last 3 months. So everyone has
Right.
reason to do good after this.
That's a very good point you make. And then people are just thinking about hypothetical, right? Because it's the basketball specifically card prices is going crazy, and then they don't play any game. Like it doesn't make sense. Like I have Joel Embiid card. I thought, oh, maybe he'll go up, in the future. No, he's going up. Like right now, he's doubling in price, and it just doesn't make any sense, right?
Well,
Because of
this,
their. Yeah, go ahead. Go ahead.
well, this is what I'm thinking is that everyone starts getting in and they look at LeBron James. They're like, oh, LeBron. And his cards go up. And then people go, all right, well, that's a lot of money. I mean, I can't afford that, but who else is there? And then they look to
Ah,
Anthony Davis and some of the others and go, all right, well, that's really good. And then they look and say, well, if Anthony Davis is this high, then Damian Lillard should be higher than that. And then they flock to Damian Lillard. And they say, well, if
right.
Damian Lillard's this high, then this guy should be good too. And so it just always starts with that standard of LeBron or Tom Brady or someone, because they see the money and the attention first, especially from newer collectors that aren't as familiar. They just go for the proven, which is fine. But those go up. And then if you always compare to someone else, then
Yeah.
it's just going to keep going up and up and up all the way around, especially
Ah.
when no one can get injured or disappoint in their performance or all those things. It just is like, well, this bar goes up, then this one goes up, and then this one, and then it's just a cycle. So I feel like that's
Wow.
the danger of sports not going on. It's just a lot of money entering without any real strategy on players so much, just because everything is in anticipation of what's going to happen. But it's
Okay.
been that way for 3 months now.
Wow. Oof. This is a good conversation already. But let me say two things real quick. One, the quote you said earlier, the Warren Buffett quote. By the way, I love him. He's on my wall somewhere. But
Okay. That's Tiger Woods.
Tiger Woods,
Wait,
this
there
is
he is,
successful people
next to
wall.
Kobe.
Kobe Bryant, Michael Jordan, LeBron James. Anyway,
And Tiger, yeah, nice.
yeah, everybody's successful. But the quote you told me that quote through the
Oh,
comment
good,
section.
good. On YouTube, right?
Yes, and
Yeah.
and that's a very good quote. And in like what you said, even if you buy like I buy base sets like soccer cards, that might be beyond that, and you might buy Kobe Bryant lots. But I think ultimately believing in yourself is like the best thing to do because if you really think something is a particularly good deal and nobody else sees it, well, then you should still buy it because people are looking for other opinions. I don't know. What do you think about that one?
I mean, look, I buy a lot of stuff that is really cheap now with the belief that it'll go up.
Right.
But I think it boils down to I can afford if I'm totally wrong. That it's just, especially because what I'm buying now is literally cards, first year cards in
Right.
sets that have not popped yet, that I
Okay.
feel like at some point will. But if
Okay.
they don't, it's $1 per card, $1.50 a card. They're proven players, and even if not, I could live with the loss. And I think there's a point where everything I show on my channel and everything I'm putting out, I'd like for every investment to have a 10x return, but I know that's not realistic.
Yes.
Yeah.
Yes.
And even a lot of the returns now, some of it's just luck from so many people entering
Absolutely.
and being able to pay a premium. But the point is that I can live with just looking at the cards. If it's worth nothing, I could live with that. And if it doesn't go up in value, then I know that other investments that are a lot safer, that are a bit more proven, that I paid a higher amount for, but I know will go up long term, that's fine as well. And the other part too is I'm not in a rush for these cards to go. So if it's like 3 years from now,
Okay.
this set finally pops, okay, it's 3 years from now.
Oh, okay.
Rather than, all right, I have to sell this. And I think what we're seeing now is a lot of people that are getting in that don't really have the patience, that might say they have the patience, but really they do not. They will want to sell for a big profit in 2 weeks and 3 weeks, which is just not reasonable in a lot of cases. The only time I could see that happening is if something big happens in that sport where a starting quarterback gets injured, whether there's a huge trade, where there's something.
Right.
But right now, with no news, how do you anticipate being able to make a huge profit without anything going on?
Right. Yeah, that's very good. That's a very excellent point. He said patience, everybody. Remember patience. Right.
We'll see. I mean, like everyone, you know, it's
Yeah.
like we'll see who actually has it, because it's like this has only been a couple months that I've been back in, and it's
Oh,
so
really? Okay.
yeah, it's only been since like February, but I'm
Wow.
buying stuff for next summer already. I'm like thinking
Wow.
of what's going
Yes.
to be hot next summer that's
Yes.
really cheap now, because, and I want to mention, I think that's also an advantage of being 33 and older.
Right.
And like I had it in that one video, it's pretty much when I was younger, a year in the future just seemed like forever. Yeah, the younger
Oh,
you are, the bigger a year actually is to you. And then when you're 80 years old, a year is like nothing. But
yes, yes.
but you know,
Mhm.
I'm at that point where at 33, I could easily say, all right, 6 months, a year in the future is not a big deal. While when I was a teenager, a year in the future is like, I don't know where in the world I'm going to be. I don't know who I'm going to be. Anything can happen in a year, which is
Yeah.
fun and exciting. But
Yes.
I think it also helps to say, you know what, let me plan for 6 months and a year ahead, while everyone now is just planning for a week or 2 weeks ahead. And that's what's dangerous. And just like that Warren Buffett, he has that other quote, the stock market, or in this case, the sports card market, is a device from transferring wealth from the impatient to the
Impatient to
patient.
the patient. I
Yeah.
know. I know. Wow, that's very, very true. Wow. And you are right. You know, younger people, 17 years old, their timetable is they think a year is so big thing, right? So maybe that's why they're looking to hurry up and buy and sell and maybe getting frustrated when they don't make profit. Oh, that's
Yeah.
completely understandable.
Yeah, it is. And I mean, like, I remember being 17, and a year
Yeah.
is long. And the difference between who you are at 17 and who you are at 18 is huge. So a year
Yeah.
is a big deal. I just, it's like, it's hard to instill that into someone that's young, that a year is not a big deal, especially if you love sports cards, because if you really want to be in this, then I don't even think of it as you have to wait a year. I see it more as, okay, if you're buying now for something that you know will be hot in 6 months, then all you're doing is having a 6 month delay, because that means in a month's time, you're buying something that you think would be hot in 7 months. And in 2 months' time, you think, you know what I mean? So it's more
Ah,
just like, let me make sure I'm
exactly.
ahead. And the more people that get in, the more competitive it becomes. In my opinion, the
Yeah.
further out you want to be, the more advantages you want to have. But one of them could just be, okay, I'm willing to buy now for something a year out, while most
Okay.
people can't even comprehend buying that far out. And so they're paying a
Mhm.
premium for something that could be a good investment in 3 months, but they also have a lot to
Mm.
lose if it doesn't pan out.
That's very true. Well, I like what you say. You're saying I can afford this. You're saying if my Kobe Bryant cards lose money, then I planned for that. And that is awesome. I think that's the way to do it. Other people, yes, they plan too, right? They'll say, I'll sell this next summer or whatever. But the problem is they're really relying on that money to grow.
Mm.
That's where my problem comes in with this honestly the whole industry, whole sports card industry. It feels like high percentage of people, how do I say, they're not budgeting appropriately. So maybe I don't know, can you talk more about how to budget, or I mean how to how to plan, like if you lose money on your card it's okay, like I don't know, can you speak on
I
that
mean,
topic?
sure. For me, you know, I don't operate on debt, so I don't have any debt right now. So everything is out of the bank account.
Okay.
Two, this is not my only investment. I have a video
Oh,
coming out where I'm talking about where sports cards rank as an
yeah.
investment vehicle, and it is not in my top three. You know,
Wow.
this is
Okay.
fun. This is the most fun one,
Yeah.
but this is
Yeah.
not the best one. It's definitely not the most proven. It's the trendiest. It's the hottest, but that doesn't mean it's the
Right.
best. So I got investments going elsewhere. I'm looking at buying real estate in the
Oh,
next
wow.
year, like going pretty heavy on the real estate,
Right.
and I have money on investments in the stock market that should be coming back in the next couple months. That will be a really good return. But the point is that
Wow.
in terms of budgeting, if you want to last in anything, sports
Okay.
cards, stock market, whatever, it's really about knowing when to step away, knowing when to say, all right, there's always going to be deals. If you're smart in anything, there's going to be deals. There's going to be opportunity. So
Right.
just make sure you're in a responsible place where you don't have to sell by a specific time in order for things to work out so you could pay your bills, because that's not healthy. If you're saying,
Exactly.
I need to buy, I'm going to buy $3,000 worth of this card and it's going to go up to 6,000 by this date. And when that happens, then I can continue my bills. That's dangerous, because if it doesn't happen, you're digging yourself a hole. And
Right.
we can only control our side of it. We can't control how a player performs. We can't control trades going on, or if all of a sudden Gary Vee's like, you know what, sports cards, I'm not really into it anymore. What I'm
Yeah.
really into are comics, just comic books.
Uh-oh.
And then he does that, and then half the market leaves. All right, well, I mean, if you're not planning that that's a possibility at least, then that's on you. You know, that's on you.
Exactly.
If you think it's only going to go up, it's only going to get bigger, I hope so, but that's just not realistic.
That's very true. That's very, yeah. You have to prepare for the worst and hope for the best.
Yeah,
Because
yeah. I
like you
mean,
said,
there's that other Warren Buffett quote where it's like, when the tide goes out, you get to see everyone who's been skinny dipping, which
oh
pretty much
yeah,
means like, yeah, who's over leveraged, who went beyond
right.
what they could really afford, and now, and we're seeing that with the coronavirus. We're seeing that
Yes.
with people out of work that just got that new house 3 months ago,
Oh
that
yeah.
lost 30% equity in their house just so quickly, that got that nice BMW, but they were relying on both incomes to provide for it, and both incomes were restaurant related. So
Wow.
it's like, yeah, but
Wow.
why didn't you have any in the savings? Why didn't you have other things going on? But
Exactly.
hey, you know what? When things are good, I remember Gary Vee saying this specifically, and I love this quote. It says, "When things are good, no one listens," and that's
Yes.
how it is before the
Yes.
quarantine. With the economy's great, everyone's employed, and that's what people are thinking now in the sports card world, where, hey, it's all good, it's going to be this way, and no one's going to listen to, hold on a second, maybe it will go up for a lot longer, but I don't want to assume that'll happen, because it's never been that way forever in anything.
Wow. Brad, man, this is all very good points. You're making me very happy, man.
I appreciate it.
Because
All I'm doing is blabbing, man. If blabbing makes you happy, then
dude, that makes me happy. No, everything you're saying. I mean, Warren Buffett quotes, Gary Vee quotes, but they're relatable to sports card industry. I love it.
There's a lot of people that listen to Gary Vee in the sports card world,
Right.
I feel like a lot of people don't apply what he's actually saying, because
I totally agree.
For whatever reason. I mean, look, he's 43, 44. I'm 33, so I'm about 10 years younger. And then a lot of people that listen, I'd say, are your age, which are 10 years younger than me. So the disconnect could be very big between him saying these principles and actually knowing that it's true. And now at 33, I know that they're true.
Oh, wow.
And will apply them. But I know if I listened to him 10 years ago, I would say, yeah, that's great and all, but come on, I want something sexier, something cooler, something faster. I want to, I wouldn't have listened to him at like the way I do now, just because I didn't have that perspective. And now at 33, I'm like, yes, I know it, because I've experienced 10 years of not listening to his words of advice.
Right. And I totally agree with you too. Even me younger, right? Even when I was 19, started listening to Gary Vee. I said, who is this guy? Get out of here, right? But later I started really not only listening, but understanding to what he said. Not everything, because what nobody says is perfect, but like the quote you just mentioned, like this coronavirus and the whole economy, kind of eventually that's going to go down. It unfortunately exposes the truth out of people, right? With all the Mercedes Benz and everybody with their college loan debt, and then so there's this whole outsider perspective. There's a whole outside. I'm sorry if I'm confusing you. Character people are trying to do, or they care about other people's opinion. Get a nice house, nice car, nice lady. They treat lady out to five-star meal, right? Um, and at some point, it feels like they're gonna have to face the consequence if they don't have if they don't have enough money. So here's what I'm trying to say about sports card, right? Do you think people are trying to care about other people's opinions. Like they'll buy a Zion card just to look cool, and that way they can flex on Instagram and just talk about it. Do you think
Yeah,
that's true? And then if so, just your insight.
of course. I mean,
Okay.
look, there's the investment side, but I think a lot of people will buy certain players that are hot, that are cool players to invest in, but we'll always say, oh, that's a good investment. But deep down inside, if there was another investment opportunity that was not sexy and it would be safer with the same upside, they
Right.
wouldn't do it because they want
Okay.
to be able to post that, or they want to be able to say that, especially if it's in their group.
Right.
If it's a group of friends that they all invest in cards or collect cards or break boxes or whatever, then of course. I mean, look, I was like, when I was 12 and 13, 14, 15, and I was buying cards, yeah, I'd show off my Shaq cards, my Tracy McGrady's, my Kobe's, all that to my
Right.
friends. And yeah, there's certain players that we wanted to invest in or collect. You know, I'd say collect uh, versus
Yes.
others that were just sexy, that were all over the ESPN Sports Center highlights and were the cool guys. We didn't really crunch the numbers and say, you know what, from a statistical level, looks like I could have invested in another player that's David
Mm,
Robinson or Tim Duncan or someone else that I
exactly.
know it would have gone up and it would have been safe and secure, but it just wasn't as
Mm,
sexy as that rookie of the year or whatever. And that all of a sudden, you know, 3 years later, they're out of the league, or they just never panned out to more than just a role player. So I think it always plays a role. I don't know if it's as much as clothes or cars or jewelry or clubs, just because that's
right.
like the really easy stuff. There's no investment at all. It's just literally,
Yeah.
I want to look good. I want to be seen. I want
Yeah.
to feel cool. And
Yeah.
sports cards, at least there is an investment side. But yeah, I think no matter what, it's gonna follow everything we
Exactly. And I'm saying if you have money to afford all those things, cool. But most people, this is true. They don't have money. So,
do. It's
it's
funny. Well, I
yeah.
mean,
What's
it's
up?
funny because like the people I know that are worth the most, they don't even like, they have nothing to prove. I think that's the thing, is
Exactly.
the people they're
Yes.
multimillionaires, they have all this figured out, they already won that game, so they have nothing to
Exactly.
prove to others, because if it came down to it, they could just compare wallets, and one person's wallet would be insanely big compared to the others, or they compare
Yeah.
bank accounts, and it's like, look, if you want to play this game, let's go to the bank, and we'll just
Oof.
see what's there. But if
Yeah.
you know what I mean, but if you don't
Exactly.
have it,
Yes.
then what are you doing? You want to show others, hold on, I do have it. So this is the card.
Right.
Look, I live in LA where I mean, we
Oh.
see it all. There's people that
Oh.
are like literally,
I
I
bet.
mean, I see Lamborghinis, Rolls Royce, Bentleys every single day. It's nothing. It's not
Yeah.
a big deal. And I know
Yeah.
Dallas is pretty wealthy too. You have some like
Oh
good
yeah.
wealth there.
Yes.
But then you
Yeah.
also have, here in LA, there's also people that, like, the average house is $800,000. It's like,
Yeah.
you know, the average house is
It's
800K.
true.
So it's like, you know what I mean? You sell your
Yeah.
house here and you could be a millionaire just from that, for a
Wow.
lot of people. And so
Wow.
I don't know. It's just kind of one of those things where there's always going to be people that are showing off because they don't have something, and then other people that don't show off because they know they have it all.
Right. Exactly. I want to say a tip right now. Tell me if you agree or disagree, right? But like you said, when I know people who are a millionaire actually, right? And you know what they're wearing? Shirts and jeans, right? And they just look comfortable in the face. They don't look like they have to prove anything to anybody, right? And that's really what the wealthy and successful people are. And then there's a other side where you see like Lamborghini and fancy jewelry, everything. Sometimes they're rich, but there's the other part that absolutely not for. So for sports card world, when people start flexing everything, this, maybe there's an underlying problem within that. Like they can't really afford all of that, right? So I don't
I
know.
think, yeah, I think it goes with everything. There are people that can afford it, that have it. There are people that can't afford it, that have it for now. And then
Right.
the same thing with the other way, where it's like someone just you know, has very low key investments that are very safe, that are very secure, and it's not very fun, but they can
Right.
afford it. And there's people that can't afford it that have those low key investments too. I would say that if you have
Right.
less flashy things of investments of whatever sort, there's a higher chance that you can afford it because you're over the mental hurdle of it not being cool
Right.
versus having the sexy things where, yeah, you can afford it, some people, but some people can't and want it just for the status.
Exactly.
I,
Yeah.
yeah,
Yeah.
yeah, that's pretty much it. And there was something else I was thinking of, but I completely
Okay.
lost that thought.
You
Yeah,
don't remember?
it'll come back right after the call, I'm sure.
Right after we finish the call, you're gonna be, hey, Brandon, I just thought of something. Oh,
And it's going to be the best part.
it's gonna be the best thing ever. Yeah. Well, hey, if you remember that, me, I would love to hear that, right?
Okay. Well, yeah, I'll let you know.
Okay. What did I want to talk about? See, I lost my thought too. Um, okay, I'm gonna switch the direction a little bit. For content creator, for YouTube content creator. So you're talking about all these low key investment and everything, right? So honestly, I prefer to keep some of my investments low key. You know what I mean? I don't really want to flex. So I have a problem. I don't want to flex a lot, but at the same time, I want to educate people and at least just give reasons why I bought the card. But I don't know what direction to go with it. I don't know if you're facing a similar thing. I don't know. Talk to me about that.
Yeah, for sure. And it's funny because I have a video coming out probably tomorrow
Oh,
about
okay.
Gary
Yeah.
Vee, and because Gary Vee's been a popular topic from other content creators, and
Right.
obviously he's been putting out his content, and he had his hour-long special Tea with Gary Vee on sports cards, and he even mentioned in there that he was finding it difficult to find that balance
Oh,
of
him. Yeah.
telling people what he's doing
Yeah.
versus people accusing him of pumping and dumping or whatnot. And
Exactly.
then I watched Jeff's video, Sports Card Investor, and he said the same
Yeah.
thing. Like people accuse him of it, and
Yes.
um,
That's true.
and
Yeah.
and you know, for me, it's funny because I sent out an email to the people subscribed on my list on my website,
Right.
saying, "Hey, there's a lot of accusations about this, and as content creators gain more popularity, our influence is going to be stronger." And I literally just put,
Mm,
I don't know the answer, but I want to find the balance of sharing what I'm doing, documenting my journey, giving you the reasoning why I'm doing what I'm doing, whether it's right or wrong, because I
right.
don't know what's going to pan out. Right now,
Okay.
everything's panning out because just people are bidding up everything. But I don't know what makes sense and what doesn't, and I don't know what's a decent investment that I'm doing that I could be making an amazing investment, but I chose not to. So there's always that,
Wow.
but it'll never be the intent of so that you go out there and buy my cards at a higher price or buy up the rest of these cards so that they go up. Because just like Jeff and Gary Vee, I
Yeah.
feel like I have
Yeah.
way too much to lose versus gain. Like when you build a
Mm,
brand and it's literally, I want to create a community of people that want to join me on this journey and become smarter investors and be safe with their own personal finances and be better with that.
right.
To make a couple
Right.
hundred or a couple $1,000s off of cards, but to
Huge.
lose all of this rapport and this reputation and everything, that's way
Oh. Oh,
worse.
yeah. Oh,
You know, so it's one of those things where I think for me, going forward, when I show the cards I'm buying and what I'm selling, I'm just going to put up a couple more disclaimers. Hey, please don't go out there and buy these cards because I did. Also, note
yeah.
that sellers may watch this and jack up the prices in response. Please do not
Yeah.
please keep this in mind. I feel like that's the best option for now. I don't know if that's the best
Honestly.
option overall, but it's one of those things where I want both. I want to be transparent, but I also don't
Yes.
want to have the market change because of what I'm putting out. And as your audience grows, I'm sure you're going to be battling that same dilemma.
Wow. Oh, thank you for that. Like that's a weird problem to have, right? Honestly, okay, Gary Vee, I don't think he's manipulating the market. He's just putting out what he wants to. So, and this is
That's it.
overall, this is life, right?
Yeah.
Trying to find a true balance of everything is going to be the most difficult thing ever to do. So, I feel like we'll
Yeah.
always have this battle, unfortunately.
Yeah. And in my video, I think I'll release it tomorrow. And this is Sunday that we're
Okay.
recording.
Okay, so it
But
should be
yeah,
out.
It should be out by now. Yeah, yeah. Now
Okay,
that I think about
everybody
it, when this
go
goes
watch
out,
that video that's out. Okay, sorry.
well, and it's basically Gary Vee has built his empire from the foundation of being very open and honest and transparent. And
Right.
that's taking the good and the bad. That's him cussing. That's him calling people out. That's him doing all this. But I feel like, and unless he's the biggest con artist in the world, which I don't believe he is,
Yeah.
I feel like
Right.
I know who he is at his core. Like and everyone I've talked to says, yeah, I've met him in person. Really nice guy. Exactly what you think.
Oh,
And I think that's where his trust is so strong, because you know that he will be 100% honest regardless of what it is he's saying. It's honest and it's from a good place. And that's why he's developed so much goodwill in me from his content, his books, everything for years, that I would never assume that he's pumping and dumping. And when he has a net worth of over $150 million, to pump and dump or to do something like that and make a couple extra $1 million, but to lose hundreds of millions because his brand is destroyed and all the opportunities go with it. That like, you don't get to that level of an entrepreneur or an investor with that silly short-term thinking, because that is literally, you don't get to that level. You know, if you're a good investor, you're thinking long-term, and everything he's saying is, I'm going to buy the Jets in 25, 30 years or whatever it is.
That's very long-term.
So to think I'm going to make quick extra couple $1 million by pumping up these cards, and risk getting caught and getting everything else going with it down the drain is beyond stupid. So I feel like the people that feel that way about Gary don't actually listen to him, don't actually like subscribe to him and listen to him to know who he is. Because if you do absorb his content for long enough, it's hard not to feel like you know who he is and feel good about the intent of what he's putting out.
You're exactly right. I'm gonna throw a Warren Buffett quote at you, and so it's my turn to say.
Shit.
So it's my turn to say Warren Buffett,
man.
and I might mess this up too. So
that's okay. Go for it. I'm excited.
So here we go. Warren Buffett says it takes 20 years to build a reputation and 5 minutes to ruin it.
Nice.
I mean, and this is very true. So when I'm thinking this mindset, right? Why would Gary, do that? His net worth is probably over 200 million, right? I don't know, but I'm guessing.
I Googled it when I did the episode, and there were a couple sources that said 150 to 160, but I think all of his businesses, et cetera, might be worth more. And his personal brand and what he could bring, I think, would be more. Regardless, let's just say it's 150 million. It's to the point where to pump up sports cards, it's like, it's silly.
Yeah, exactly. And I don't really like the calling name of other sports card people, but I will. Because, hey, honest, right? Jeff, sports card investor, honestly, I think he's a really good guy. I mean, I've been subscribing to him since, I don't know, when he first started his channel, honestly. And I sometimes I can tell just intuition, right? I know he's a good guy. It's just maybe he portrays things like to say, here you should, like, top 5, you should buy this, maybe it's just what do you call it, a misinterpretation from what he's trying to say, and now his fans and stuff think, oh, I should buy this card, when that's not really what he's saying. So I respect him, and I think he's gonna do it right, though. I mean, I really think he's good. I don't know, what do you think about like some of his videos and stuff?
I like, from the moment I got back into sports cards, Jeff was the first guy I was drawn to, because it was literally sports card investors. So it was him and PSA Collector, both of them I'd watch.
Yes, yeah,
obviously,
yeah.
But and they're the two biggest YouTube followings that I know of on sports cards. But one,
and Jab's family too. But
what's that?
Jab's family. You never heard of Jab's family?
No, I'd have to check them out.
Sorry. Ooh, search up Jab's family. They're baseball card. Anyway.
That's probably why, because I don't do any baseball, pretty much.
Me neither. But I mean, but they're more like a lot of open packs and stuff like that, right? They're very fun. Anyway.
Okay, so that's probably it, because I'm I'm like drawn to the investor side, and then drawn to
Okay.
Matt, PSA collector, of just buying single cards mostly. So when he does single cards or that topic, I watch. But obviously Jeff is more of the investor, Matt's a bit more of the collector. But I like getting the input of both, and they both have great channels. So, but from the beginning, I was like, this guy is sharp. This guy is on it. When I'm talking about Jeff, because he didn't have to have all the card knowledge, because he has the investor and business knowledge. And then everything I'm looking at his channel, I'm like, dude, your branding is on point. You know how to build a brand, you know how to market, you have the 3 pricing structures, your membership, $9 or $10 a month, then the $50 a month data tool, then you have your clubhouse or your executive room or whatever. So you have everything is how to build a business executed phenomenally well. But then when you talk about trends and players, that's when I felt really good, because it was very much what's not being seen, what's not being talked about, what is low now, what will be high, all that. And that's the mindset that I like. I never felt like he had any bad intent at all. The one thing I would say is I feel like his brand, because he was one of the only guys on YouTube putting out good content, his brand has blown up very quickly. I think to the point where if he says anything about recommendations, he'll be accused of pumping up a player, because now instead of having 500 people watching a video, he's having 5,000. And because of that influence, just like if Gary Vee says what he says and 10 people are listening, no one's going to accuse him. But when there's 800,000 downloads of that episode, then all of a sudden it's, hey, you're pumping it up, when in actuality, he's saying the exact same thing he would before. It's just now he has such a big audience that influence is going to change the way some people actually act or behave, or a noticeable amount, so that prices actually move one way or the other.
Very true point. And I know Jeff, even before, like way before, when he was talking about Luka Doncic is $70 and all that stuff, that's like his bread and butter, is like the recap of all the sports cards. So I think that type of thing is really good. So I would just say, for people, they're just wanting to buy the cards they see too, which is one issue. It's not Jeff's fault. It's just
people are lazy.
Unfortunately, it happens. But I don't really like to follow advice. I love watching these videos, but I'm not just gonna follow it just because they say something, right? So from new investor mindset, like, what do you think? Should people be listening to I don't know how to say this, particular people, or follow advice? I don't know. What do you think?
I mean, I have in my guide, like that I give away, which is just for the first 3 weeks, what I'd recommend is don't buy a single card for the first 3 weeks of getting it. First 3 weeks is all just consume as much content on sports cards, podcast, written, video, everything, and get so knowledgeable so that if you're starting with $50 or $50,000, you have a good amount of knowledge to where you want to start, and the excitement has tapered off. Hopefully, because at first it's very easy to just want to buy something, just want to get in there, and I get it, but that's dangerous, because if you were like me, then you have a bit of a collector brain going in, and you're justifying, it's a good investment, but really it may be a decent or okay investment, but it's really just a really cool collecting piece. And that's fine if you want to have a separate fund for what you want to collect. But as an investor, I would say, all right, listen to the videos, watch them, and the advice on mindset, the advice of tactics, where to look, how to think, all the different ways a card can go up, that's great. And then look at trends and see where that has been true and where it may not have been true, or not to that extent. But if it's go out and buy this player, that's dangerous. It's dangerous just because if you're not the first person to watch it, if there's 1,000 people that watched it before you that bought those cards and then just marked it up at a higher price, you may actually be paying a premium for the card that was a good deal when that video aired, but now is not. Now you're the sucker paying $100 for a card that was $20 when that video was released, and now you're trying to sell it for $150, and everyone's like, it's overpriced. So that's just doing your own due diligence and understanding what's the thought process behind it, and then taking a look. Hey, they said buy this player right now and at $20, and then you look and you see the prices are at $50. Well, you
Mm.
see it's already moved, and then
Yeah.
you can apply that to the next player, or you could see if that player goes down in price in another couple of weeks. But you know, at the end of the day, it's formulating your own strategy. It's not relying on people to give you the answer.
Exactly. Amen. You said it correctly. It's not a yeah. It's about looking for your own answer. That's very true. And yeah, the first 3 weeks, I probably recommend that too. Especially if people like three sports, maybe spend one week on each sport. I don't know.
Mhm.
So for new investor, yeah, well we covered a lot of stuff. So
Yeah. How
hold on,
long has
give me
this
a
been, by
second.
the way? What are we at? Like an hour?
Dude, I don't even know at this point.
Yeah, man.
Well, you've been doing most of the video, so thank you for that. I've just been asking them questions.
Just blabbing, man. Just blabbing, getting all my blabbing out for the day. Haven't blabbed to anyone today,
You
so
haven't
it's
Hey, please blab to me. I want you to
just
blab, blab, blah, blah, blah. Okay.
just give me one topic and then put a 10-minute timer and I'll go on it.
Okay. I want to hold on. I want your opinion on something real quick, real quick.
Hmm.
Okay. And you told me this, and you compliment me so much, man. I want to compliment you too. You are an authentic, trustworthy guy. I know if I meet you, you are actually you. You know what I'm saying? You're not like some other dude off the camera, or something like. I have I
Well, thank
have
you.
I have
Thank
this
you.
intuition, and it's right most of the time. So I know you're good. Anyway, let
Most of
me
the time.
most of the time, not all the
Not this
time.
time. Yeah, right.
This time, I know this time for sure. Okay, okay. Let me get my question now. Sorry.
Sure.
So you told me something. I have humility, and I respect that, right? And so for sports card, new people, I want to help out the new people and other people who need lessons, right? Um, why is humility important? One, why is humility important for new people? And second, how how can they be like hurt or negatively affected if they are just how do I explain it? If they are just not willing to learn and not willing to like to listen to data or facts or anything. I don't know. Give me your.
I
Sorry,
mean,
sorry.
look, obviously, humility, we all get humbled at some point, and a lot of
Yeah,
people have just been humbled from the coronavirus because they hadn't been humbled before.
good point. Yeah,
And I mean, look, people have to learn these life lessons in due time. So you
I
either
agree.
learn it on a $50 card that you bought without any backup, any reasoning to, and then it went down to $10, or you learn that on a much bigger scale. So
Right.
for me, it's kind of like this. For the last several years, I've been telling people, get out of debt now. The stock market is going to go down. It's been the longest bull
I
run
agree.
in U.S. history.
I agree.
Uh, so I've been telling this, but again, people don't listen when times are good. So
Yes.
at the same time, I'm kind of like, look, I'll tell you the answers of just to be humble and understand that that's going to help you and to get out of debt and to do your research. But if it doesn't hit home, then you're going to learn the hard way. But if you learn the hard way, you'll also rebound and you'll do better next time. And there's so many people I know that had to learn the hard way in 2008 with the Great Recession, that
Yes.
were banking, that were just had 8 houses and it just kept going up in
Wow.
value. And this is the best and the best. And you just buy a house, and you're a barber, so you got 2 houses. You work at a restaurant,
Wow.
you have 3 houses. Anyone can get a house, and they just kept going up. And it's very similar to the sports card
Wow.
market. And
Wow.
people think it's just going to last and things are going to be like this and it's just great. And it's just
Yeah.
careless, in my opinion. It's just careless because all you have to do is just do a little bit of research on economic cycles, a bit of research like that, to know that, all right, this is not sustainable, and it's better
Yes.
to get out with some profit than to stay in and be a day late. I think for my investing philosophy, I'd rather be 6 months early than one day late. 6 months early
Exactly.
means I make some
Yeah.
money and it's not the last
Exactly.
second, and I probably leave a lot on the table. But one day late means I lose,
Ex-
and I'm good
yes.
with my philosophy like that. So I'd rather just get out too soon, making a 2x return, than some people and let other people make a 2x return or 3x return by buying my cards at a return I got. But then they also carry the risk of being one day late. That player gets an injury,
Wow.
the team gets bounced from the playoffs, anything happens. So
Wow.
you know, I think the biggest thing is just, I hope everyone has been humbled to this point or is
Yes.
willing to be humbled, just because history shows that everyone that hasn't yet been humbled will be humbled
Yes.
in life. But
Yes.
if you're hurt and you learn this lesson, hey, bounce back up. You take the lesson. You got hurt,
Yes.
you learn, and then life goes on. What are you going to do? Just be sour, or just be have this victim mentality around it forever? Because that's not healthy either. Life goes on, and
Exactly.
your greatest defeats will be your greatest successes, right? I am where I
Amen.
am
Yeah.
because of all the things I've learned in the past, and same as you, and same as everyone
Yeah.
else. So
Yeah.
we all learn one way or the other.
That's true. Maybe I'm too nice of a guy, right? I just want to give people exactly how to do right way, but not everybody's gonna listen. So, unfortunately, you got to learn the hard way sometimes. It's so tough to say, but
It's funny.
yeah.
I put out a video about debt a while
Yeah.
ago on my other YouTube station, and it was pretty much
Oh,
this.
really?
Yeah, it was pretty. It was very matter of fact. It was very direct. It was probably offensive as well. I just don't really care. But it was
Oh,
pretty much
okay.
this. The message was this: pay off your credit cards, get out of
Yeah.
debt,
Yeah.
live within your means. The economy's not going to be like this forever. If you want to follow that advice, you are going to be fine. If you want to
Okay.
ignore me, guess what? I'm also going to benefit. And the way I'm going to benefit is
Wow.
because when I look to get a car, I do not want to go to a dealership and pay a lot of money. What I want to do is go to an auction and buy your BMW that was repossessed for $10,000. So either you
Wow.
are on my side and you're willing to work and get your finances better, and I'm happy because that's more fulfilling to me. But if not, understand, I'm then going to go out and buy the car that you had that got repossessed for
Wow.
a dime on the dollar. The reason why there is so many deals in real estate when the market crashes is because so many people over leverage themselves beyond
Yes.
what they could really afford. Investors need those opportunities. And the way they get them is for other people to be careless with their decision making around major purchases and their careers and all that. So I want to give the information for people to make better decisions, but understand that if you don't want to make better decisions, I will also benefit from your carelessness. And it was a very
Wow.
direct message, and I 100% agree with it. As in, I don't regret it at all. That's literally how I believe. I will give
Wow.
you the tools to be better and succeed. But if you ignore me, I will also benefit from your demise. So you choose.
Wow.
You choose. And
Ooh.
sorry if that's offensive, but
Ooh.
hey, that's how it
No, no,
is.
no. Ooh, Brad, wow. Even I'm too nice for that. Brad is
I'm
telling
not,
you,
man.
he is telling you, listen to me or I'm gonna beat you anyway. He says I'm gonna
Well,
be successful either way.
like
Wow.
either way I win, but
Wow.
I'd rather you win from learning these principles that I've learned from greats versus
Exactly.
me winning by buying your car for pennies on the dollar.
Yes.
Because either way, that's going to be there from someone else that didn't listen to me, that didn't have access to this
Wow.
information. However, I would rather you listen to this advice and then write me a message saying, hey, that was really good advice. I'm working on that now.
Wow.
That's pretty cool.
Yeah.
But if not, all right, go to the auction, get a nice Tesla, and then.
Dang, man. Oh, by the way, what is that? What is that YouTube channel called? The one where you're explaining.
Yeah, the channel's called the Millennial's Guide to Money, and I
Okay, there
haven't
we
been
go.
active on it for a couple of months now because I've been into cards so much. But what I'll do is I'll send you
Oh.
the link of it,
Please.
so you can have access to it.
Please send me the link and I want to put that. I don't know how I'm going to make these videos yet, but maybe video clip and I'll put the YouTube link. So people, if you're watching that YouTube link, that is very
Mm.
important information, right? You just said like 10 things, but I can't get into all that.
Yeah, for sure.
Oh, I know. Okay. Oh, I lost my train of thought too.
Yes, it happens, man. It happens when I ramble and I blabber.
I know. No blabber, but you're saying really, really positive things. Oh, here, I remember. Okay. So sports card is considered actually investment style. You know what I mean? Like just the same as real estate or stocks. If it is or not, that's not. I don't care about that. The fact that it's considered it. and financial analysts, I heard, actually are recommending sports cards as an investment portfolio to people.
Mm.
First of all, let me tell you my problem with that. What if financial analyst doesn't know much about sports cards? So like, which one should people buy, right? So it's very tough. I don't know. Give me your opinion on that and what you think.
I haven't heard a financial analyst give opinions on sports cards yet, but what I imagine happening, if it's not already happening now, is that there's just mutual funds where it's literally someone that does know a lot about sports cards having, all right, here's $10 million, $20 million given to them. All right, well, what are we buying with this $20 million? And I think that's the part that gets scary, is when it's the same thing as real estate. When you have these giant corporations or hedge funds with tens of millions or hundreds of millions of dollars, $100 million, someone with that money going into sports cards can wipe out a lot. Like they can wipe, I mean, $100 million, saying, all right, you know, we have $1 billion in our portfolio. We want to put 50 million towards sports cards. I mean,
Ooh.
how much, like that's a lot of Jordans. That's a lot of Kobe rookies and mantles and everything else. So, but I would imagine if there is, if it's not going on right now, some sort of mutual fund where someone, or a hedge fund where someone is really good at cards and is buying, okay, I'm going to buy 80% classics and then 20% up and comers and whatnot. And then people are just investing, well, here's $1,000 and I just want, that's 8% a year profit, or 8% return a year, or 10% or whatever it is. But someone else is the master controlsman and is putting all the pieces together. So it's like, I forgot what it's called for real estate. Syndicator. A syndicator is basically someone that says, syndication. All right, you invest 100,000, you invest 50, whatever. I'm going to go out there and buy this huge commercial property, fix it up, and do all this. I'll give you guys each your 8% a year, and then when it sells in 5 years or 6 years, everyone will get a split of the profits minus what I take for myself, and everyone wins that way. That's what I imagine is happening now, or will happen in the near future.
Wow. Well, if I'm sorry, I keep saying here's my problem, but here is my problem with that. You're talking about syndication, how that can be a real thing in relation to sports card world. Well, based on my knowledge, I knowing about syndication is that there can be a lot of problem with it. I know Grant Cardone. I've heard Grant Cardone has syndication, Cardone Capital, right? So Jordan Belfort, Wolf of Wall Street. I don't know if it's true, but he's talking about how Grant Cardone has unaccredited investors, meaning they have less than $200,000, something like that. So basically, people are spending $5,000-$10,000, like poverty people, out of desperation, just trying to make these profits. So I feel like the same thing could potentially happen in sports card world, where you have a claim to be expert guy. If he is or not, I don't know, but I think there needs to be a lot of requirement for you to be involved in something like that. What do you think?
I mean, that's beyond my comprehension
on
that level, but that's also like huge money too. So I mean, I think on a smaller level, it could be. I've talked to my girlfriend about this because she's interested in investing with me, and she's a full-time investor in the stock market, and so we talk. And really, she understands a lot of my theory of what I like about sports cards because she understands it from the stock market side, and vice versa. So I would compare, she's talking about Disney, and I'd say, oh, that's kind of like, you know, Charles Barkley or Google. Oh, okay, it's like LeBron James or whatever. And I get it from that point. But I said, you know, I mentioned to her, I said, you know, I love this, and I could see myself investing $100,000, $200,000 a year in this, and full time. And why not? And she said, yeah, and I'd give you money. I'd give you like 30,000 or 40,000 to like play with and put in certain things. And obviously when you can do it and you do it right, then, well, another friend says, well, I got an extra 10,000. What can you do? And then it could all of a sudden become like a little hedge fund or like a little kind of syndication, but on a smaller level. I don't know the legalities with that, because it could just be, look, instead of structuring it that way, I know what my investments will bring per year. And how about this? Let's just do a private loan. You loan me this money, and it's for it's a 3-year loan, and every year I just give you 10%, and after 3 years I give you your money back. And then that's a different way that people do it in real estate as well, with flipping houses. It's just like a hard money lender, but instead it's saying, hey, how would you like to make 7% on your money every year?
Right.
Okay, well, 30,000, yeah, let's just sign a contract. Every year I'll give you 7% for your $30,000 for the next 3 years, and then after that you can cash out. Okay, deal. And then all of a sudden, now that's high risk as well, because you got to be able to cover yourself. But I can see that becoming way more of a thing locally within small groups, when one friend's really good at it, and then, hey, well, my investments in the market are tanking. This is really taking off. If I give you $5,000, what can you do with it? Well, how is 10% a year? $500. Well, okay, that's better than what I'm getting in the market. So sure, I'll pay you back at the end of in 2 years or whatever it is. So, dude, the sky's the limit. When money is being pumped into anything, the opportunities just open up in every direction.
You're exactly right. Our sports card is crazy now. Oh my God, there's so many different avenues. And so this one, you're talking about the hedge fund side of it. I didn't expect to get into the conversation, but we're already here. So I'm gonna say something a little bit real fast, right? So the lending part makes a lot of sense, right? Where your initial investment, and then in 3 years you'll get money back plus interest. I like that. But at the same time, why don't I just do the same loan but for real estate? It's a lot safer.
Yeah, for sure. Yeah, and I mean, in my video that's coming up about the best investments, real estate's ahead of sports cards.
Yeah.
Now, but at the same time, you could overpay for real estate. You could overpay for sports cards.
Absolutely.
But I don't know anyone that's become a self-made millionaire from sports cards. I know a lot of people, hypothetically, in media, or like not hypothetically, but in the world, but also just locally as friends, that have made millions in real estate while they haven't made it in sports cards. And there's a couple advantages of real estate and stocks over sports cards. But sports cards is the most fun. It's the coolest. It's the best to be active in if you don't like real estate and stocks. Like, I didn't get into stock trading because it bored me. It was too analytical without the fun. And the sports cards is the good blend of, I like looking at the card. I like the artistic side. I like looking at athletes that I watched on TV when I was a kid, and being able to use the analytical side of my brain to profit off of it, to keep it rolling. But if it was just looking at a chart of whatever companies, you lost my interest. And then real estate's great, but I became a realtor a couple of years ago and realized I hated real estate on the day-to-day side. I just loved the idea of it as an investment vehicle. So I learned the hard way, Brad, just stay a passive real estate investor. Don't be active. You're not a day-to-day investor. You don't want to go to a house and knock on a door and have tenants there yelling at you and having a hammer and you have to knock down this wall. That sounds miserable to me. But being active day-to-day in sports cards doesn't, while being able to have a real estate property that's growing in equity, that's providing cash flow, that's going to be able to add up all these tax advantages as well that other businesses don't operate. That's great. But I learned through years that that's my role with real estate. This is my role with cards. That's my role with the stock market.
Wow. I mean, the information that is being poured out of this video, if you guys don't like this video, there's something going on in your brain. Brad is just spitting incredible knowledge right now. Honestly, this should cause, I should be charging money for this. I should be charging.
Well, that's the next business. That's the next business.
Oh, I just thought of next business. $10. No, I'm just joking. I'm just free. I like free information. People, if they wanted to chime in, they can. If not, cool too. But
cool.
bring it home for me, Brad. What do you think the sports card industry is going to do? Like, do you think it'll be long lasting, or what's your guess?
I mean, like, look, it's hard not to hear Gary Vee and try and take his perspective, because I know how smart he is in his field. I know the fact that it's going in the right direction. This level of excitement will taper off. I see sports coming back and it helping, but it is new and people are all making money. So when people start losing money, there's going to be those that leave, that are sour about it and get out. And then there's going to be more people in. And in the latest podcast, he said there's going to be a new level of normal that's higher than it was. So right now, before it was a low level. It was just normal.
Right.
It's pretty low. And then we have this giant surge, and it's really crazy. And I got to wait for everything to settle a bit to understand what that new level of normal is. But I'm having so much fun. I brought my best friend in. I told him about cards a couple months ago. He is so fired up. I mean, we have, and this is coming out in my next video, which should be out. But I literally said in the video, I'm closer to my childhood best friend now than we were over the last 15 years because of cards. We have gotten so close. We text, we talk, we share pictures. He has a YouTube station growing. And I'm like, we have not been this close since we were 15, 16 years old playing video games together in high school. And so I know if that's the case for me, that's going to be the case for at least a couple thousand other people in America, where they are just connecting to something that's so fun and childlike that they've gotten away from, especially my age group, where childhood is, I'm 33, so I'm like 20 years ago. It's forever ago.
Wow.
And to be able to connect to that is so magical that it's going to be lasting, and people will want money to be in it, because when money is involved and there's more opportunities and you can actually make a decent amount versus it's just this little low end hobby where it takes time rather than I could put time in and make money, that means it's going to be good. It's going to be good for a while. Now, what's with Panini, could they print a ton of cards and it kind of turn it into the next junk wax era? Yeah, I mean, honestly, it's a very realistic possibility where if they don't print enough, or they don't jack up the prices super high, then the supply could just go out of hand. And so I don't know the counterbalance to that, because obviously the supply demand ratio needs to be healthy, where money's in it and cards are worth more and people can make money, but not to the point where there's a million Zion cards being printed and then all of a sudden they're just worth $4, and now we're going back to, okay, there's no real points anymore. So I believe, like, optimistically, hopefully the new level of normal will be up and will run for a long, long time, because I want it to. I'm putting in a lot of energy and so that this will last. But when there's so much fun involved and there's money and the platforms are getting better to cater to all the complaints and all the things we don't like about the hobby or the way it was before, then I'm very optimistic.
Awesome, man. I'm so optimistic with the sports card too. Yeah, like you said, it's so much fun, right? It's a fun way to invest or collect or do whatever. And the reason why I think this industry will continue doing very well is because there's many different avenues with it, right? There's not a one staple and that's it, right? There is just, I don't know, it's really fun. And like you said, my friends even text me like that. They haven't talked to me in 5 years or something. And now they're like, how do I get into this? So it's just so much fun. It's very exciting.
And yeah, you hit on the head with, there's a lot of different niches and nuances of sports cards that you can get into just on the side, saying, you know what, I just want to bust open a box once a month. That sounds cool. Boom, there you go. That is your thing. And you throw them up on eBay or ComC or Star Stock or whatever, and someone like me goes in there and cherry picks the cards that I like of the players I believe in, and then we transfer that over. But just like fantasy football has exploded, and now people are making full-time incomes with fantasy football. People want, and the other thing too is people want an excuse to watch sports. If I could say I am doing work, honey, by watching Sunday NFL Ticket, Red Zone, all the time, and watching the NBA playoffs and the NHL playoffs, and that's work, and that's going to put money in my pocket. Holy shit, give me that. That is like dream come true, is to watch sports and it turn into income versus, again, I don't have time for hobbies that are going to just take up all this time and money. Like, so if you can make money doing this, who wouldn't want to be a part of it?
Exactly. I mean, that's a whole pitch right there. I mean, you can tell your wife, you can tell your girlfriend, hey babe, I am working right now. Right. But you're just watching a football game, but you're, analyzing players or whatever. And that is so cool to me, bro.
That's it. Yeah. That's it, man. So I'm excited. I'm excited for you too, and what you're putting out, and you just keep at it, because you're doing a great job.
Thank you so much. You too, man. Your perspective on money and personal finance and sports cards is just such a really cool combination. I can't wait to see what you do too. I really can't wait.
For sure, man. Yeah.
Uh,
Well, we're on this journey together.
we are, man. If you need my help, or I don't know why, but if you do, your boy is here, so call me up, okay?
We'll do, of course, man.
All right. Well, thank you so much for coming on, Brad, and man, just thank you guys for watching. Oh yeah, oh, wait. Like, subscribe, do all those things, and check out Brad's. He has a YouTube channel. He does a lot of sports cards, right? So at the
Yeah.
Comeback Card Investor, and he has Instagram. Okay, I'll put all the links in the description. How about that? Okay,
That
thank you
sounds
so
good to
much
me,
again.
Brandon.
I see you.
Thanks, guys. Thanks.
Thank you. Bye bye.